And so when people talk about, say, Bitcoin not being a good hedge against CPI inflation, really that's because it was a good hedge against the actual increase in the money supply, especially in the global sense, when measured in dollar terms. And now that we're getting kind of the hangover in central banks, or at least around the margins, trying to tighten policies to some extent, we have fiscal taps turning off. That's putting more pressure on this whole space.
Hello and welcome to Wealthy Value. In today's video, founder of Lyn Alden investment strategy, Lyn Alden updates about the biggest danger in the macro situation that we're facing today, the current Bitcoin cycle, and how it's going to play out in the next couple of weeks. Lyn Alden also shares her thoughts on the superiority of Bitcoin over other altcoins. Gary Gensler comments about Bitcoin as a commodity and her thoughts on adoption of Bitcoin as a legal tender. Make sure to stick around till the end of this video where Lyn Alden shares her opinion on how the dire macroeconomic situation might hit the crypto sector and why El Salvador was right to do only Bitcoin and not shitcoins. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. Let's dive right into the video.
The biggest danger is that basically for the first time since the 1970s, we have a combination of rapidly decelerating economic growth with still high inflation, and in some cases still rising inflation. And so, when you look at recent economic cycles, normally when you have a downturn, you get this, reduction in demand. You have a somewhat overcapacity in terms of production, and so you normally get somewhat disinflationary pressures when you have that type of downturn. But because we have a lot of supply side issues, and because we had such a large increase in the money supply for many countries in the past couple of years, this is the first downturn in decades, in many decades, where we have high inflation at the same time, basically a true stagflationary type of environment. And it's among the worst in Europe, but for obviously specific reasons related to energy security, but globally, this is something that's happening in large part tied to the energy market, supply constraints there, combined with just how much currency was created over the past couple years. Over the past decade or so, which is a pretty short sample, because Bitcoin is still a relatively new asset, generally it does well during rising PMI environments, so economically growth is accelerating, and it generally goes through its bear markets or its stagnation during declining PMI environments, economic decelerating environments. And there was a big wild card this time saying, okay, well, we have a declining PMI environment that should probably be bad for Bitcoin and altcoins. But then the question was, how is that going to work with so much inflation? Which one would end up winning? And generally what we've seen is that Bitcoin tracks global liquidity very closely. So when you have global M2 increasing at a rapid rate, generally Bitcoin doing quite well as a fixed supply asset, decentralized bear asset. That's a very attractive thing to hold when you have all these different fiat currencies expanding their broad money supply very rapidly. When they start to contract, that's when Bitcoin and then the whole shitcoin ecosystem kind of starts running out of kind of euphoric buyer, starts to go through this consolidation. And generally what we see in these cycles, Bitcoin, it goes through these consolidations when you have declining liquidity environments, but of course 4 times now it snapped back very strongly in the next cycle. So it keeps having higher highs and higher lows as it monetizes over more than a decade and counting now. The altcoins generally respond very differently, where they have a similar timing mechanism where they go up very sharply during that rise in liquidity environment and then fall. But the difference is that historically, very, very few of them have a second or third cycle in them. Usually they have 1 cycle, 2 cycles, and then they generally roll over for good, especially as denominated in Bitcoin. And so I'd be very cautious about touching any of the altcoins. As you point out, a lot of them would be considered unregistered securities based on how you look at the Howey test and things like that. So both in terms of insufficient network effects, Ponzi-like dynamics in many cases, I think the vast majority are untouchable, whereas Bitcoin is obviously right now it's in a very kind of tough spot. But I think as you look forward to the next cycle, I think this is a deep value zone. And one way that the two markets are interlinked is that Bitcoin is often used as collateral for companies to go then and speculate on these altcoins. So if someone puts Bitcoin in one of those lenders that they own, and then they take the stable coins or take fiat dollars, and then they go and speculate on leveraged altcoins, and then those blow up, their Bitcoin collateral gets liquidated, and then that lending company just sells the Bitcoin immediately. So you have a lot of forced sellers in the market, even though a lot of the actual bets were not on Bitcoin itself, just Bitcoin was the pristine collateral used in that ecosystem. So that's how they end up being unfortunately linked for periods of time. The broader point is that, and actually Adam Back described this very well, that money is a very limited design space. And so there's only so many variables that you can change to try to come up with better or worse things. And most of what we see in the altcoin space is that they claim something is better, but then they hide the fact that they had to make so many trade-offs in order to have whatever advantages that they have. And the most common thing that they sacrifice is decentralization. Whereas Bitcoin is optimized to be as simple as possible, to be as secure as possible, to be as decentralized as possible. It makes purposeful sacrifices in other areas to be that kind of hard underlying money, that hard settlement layer that other layers like Lightning and things like that can build on top of. Basically, it focuses so heavily on that, whatever it can do to remain decentralized, which is the most important thing for its immutable long-term success. Whereas what a lot of altcoins come along and do is, one, they launch, by kind of like an IPO, but an ICO. Unlike what Bitcoin did not do that. They just kind of put the open source program out in cyberspace. Satoshi didn't give himself any pre-mined coins. A lot of these other ones come out, they do pre-mined, they raise capital, and then they launch a project that on the surface, it looks like Bitcoin, but it's a much more centralized version. And the reason they do that is because they want it to be faster, they want it to have more attributes. But if you sacrifice the decentralization, you pretty much entirely defeat the purpose of using a blockchain money in the first place. And so a lot of it is basically different entities want to create seigniorage. They want to make a token, sell to the public, and then kind of get out of it before the next cycle comes along. And when it comes to proof of work versus proof of stake, this really goes back to the whole gold era and then the rise of fiat currencies, where money that no one can create without putting energy into it, putting resources into it, ends up being truly hard money, truly scarce money. It's not politically controlled because there's no entity that can just create more of it without expending resources. But I think it's attractive in the sense that obviously it makes it a very useful place to start businesses or to host businesses, right? So they've made themselves an attractive area for that. They've also obviously done well for their tourism. Over the long run, that should be useful for remittances, especially as we see more and more Lightning development. And basically by having that as legal tender, especially for a country that had a rather low percentage of the population that was fully banked, this basically is a tool that now reduces the frictions a lot of people have in order to access money, transfer money, save money, and they can do so often in Bitcoin or dollars. And so I think that's obviously a very useful thing. The risks around the whole thing mostly relate to external problems, right? So for example, if the global bond market wants to sell off the bonds, that obviously creates financing risk for the country, but that's largely a separate question from whether or not Bitcoin is good for people on the ground in El Salvador, or at least that they have the option open to them to the extent that they want to use it. And so I think it's a great thing that the country's doing. They're in a position where they were able to take more risks than the other countries and basically spearhead this. And obviously, a lot of the international global finance groups don't necessarily like it, but it's because it goes against their current system as designed. And so I think it makes sense for more countries to eventually follow this model, and just be aware that they can get pushback from some of the established system when they go down this route, even though it can benefit merchants and buyers and various economic participants in their country. I think a trend we were going to see anyway was more decentralization in the types of reserves that different countries hold, and I think this just accelerated it. And so up until this point, the vast amount of central bank reserves consist of treasuries, and to a lesser extent euros, and a couple other major currencies. But the whole point of a sovereign reserve is that they have a backstop for their currency, and that they can also use those assets in order to buy external things like fuel if they really need it.
So what are your thoughts about Lyn Alden's perspective on Bitcoin adoption? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.